On September 23, the British Prime Minister, Liz Truss, announced the biggest tax cuts in 50 years, estimated at about £45 billion over 5 years. The proposed tax cuts alleviated some pressure on UK's highest earners, and announced a rollback of corporate tax hikes and a cost increase for national insurance. Investors from around the globe responded by selling off UK-backed assets and pushed the British pound to a valuation of $1.03, its lowest ever value against the dollar. Truss have stood by her decision to cut taxes for some of the wealthiest citizens and create special incentives for corporations, including tax cuts and rollbacks in regulations, insisting that the tax cuts will produce more investments in the economy. The UK was already dealing with global inflation and stagnant wages, in addition to a poor recovery due to the COVID-19 pandemic. The UK was the only economy in the G7 group of nations that is yet to return to its pre-pandemic level. Add to that, the energy crisis amid one of the hottest summers on record, and a recession has seemed inevitable. Investors saw that the tax cuts are so illogical and dangerous that they are rushing to sell off their British assets, whether it's bonds or holdings in pounds, further driving down the value of the currency. The announcement of Truss's new plan triggered a sell-off in government bonds, which typically is considered a safe investment, which was so extreme that the Bank of England, the UK's central bank, stepped in and purchased £65 billion worth of bonds, to restore orderly market conditions, and keep the country's pension plan afloat. Another reason the tax cuts seemed irrational is that they'll be financed by further borrowing. The UK already has a significant public debt burden. Without new taxes, the UK's Office for Budget Responsibility warned, public debt would balloon to 320% of Britain's GDP in 50 years, up from 96% now. This will result in further spending cuts for benefits and public services in the future. Furthermore, the International Monetary Fund, also known as the IMF, also issued an astonishing statement saying that the nature of the UK measures will likely increase inequality, and urged the government to consider ways to provide support that are more targeted, and re-evaluate the tax measures, especially those that benefit high-income earners. The reason that this statement is so astonishing and unprecedented is because the IMF issues statements like these to up-and-coming economies with controversial policies, not to the fifth-largest economy in the world. According to Truss, the tax cuts would have enabled corporations to pump money back into the economy in the form of jobs, wage increase and dividends. However, injecting more money into an economy already suffering from an inflation crisis is illogical and goes against the efforts of the Bank of England, which has raised interest rates 7 times since December, to help reduce the rate of inflation, which is now around 10%. I think we know where Truss drew the inspiration from such measures. US President Ronald Reagan also cut taxes amid high inflation in the early 1980s. As a result, the US dollar surged and benefited from its position as the global reserve currency and incentivized a robust global economy. Unfortunately for the UK, the exact opposite happened. The new measures also proved to be unpopular among voters. Recent polling surveys show that the Liberals have a 33-point lead, which is the highest they've gotten since the 1990s. Taxing income is a good way to tackle inflation and also provides the government with revenue to fund its programs, but instead the current government proposed tax cuts to a bleeding economy. With regards to the soaring energy prices, the British government is trying to do something. As Russia's invasion of Ukraine this February sent energy prices skyrocketing, UK households were expected to be squeezed even more than their counterparts in Western Europe due to poor insulation and a high dependence on gas to heat homes, according to an IMF analysis. In response, the UK government announced this month that it would step in and subsidise energy bills for households and businesses in what may amount to the biggest government intervention in the economy in decades. After announcing a plan to cut taxes for top earners, on October 3, UK Prime Minister Liz Truss reversed that plan. Although British markets initially rallied, questions remain about the UK's economy in the long term. The short-term recklessness may have cost fifth largest economy in the world more than what was expected, and trust decision may have just triggered an economic crisis.